Hello and welcome to another update video about ADA. So ADA is currently quite deep in support. I think we want to take a look at the larger time frame first before we dive into the smallest time frames. So actually I have to select the ADA long-term chart. For anybody who's not aware, obviously we have some long-term charts available as well. They are accessible as part of the membership, but for altcoins, it is not necessarily so useful to focus on long-term charts, but they can still give you a good idea of the roadmap. They should not be seen as too predictive because so much can happen on the way up, yeah? And it is fact that altcoins, when Bitcoin says the bull market is over, don't assume that these altcoins will follow through with their bullish structures, okay? They won't. They will break when Bitcoin will break, regardless of where they are in their cycle. So in this video, I want to share with you what ADA's upcoming rally could look like, but I also want to share with you what is the key threshold when this assumption will break and has to be thrown out of the window. This level is going to be very relevant for risk management. There is, of course, a bullish and a bearish scenario. Because we are in a wider bullish market, the bullish scenario is currently preferred, especially as long as we're holding above support levels. A break below support will be bearish and will indicate that we're heading back into a bear market. That's what it is. You know, nobody can promise that support levels are going to hold, but they are pivots, okay? And as long as we can position ourselves in an intelligent and smart and strategic way in these pivots, close to invalidation points, in support areas, with a good reward to risk ratio, that's the only way how you can survive in this game. It is not the case that these setups have to work out, okay? Markets are very uncertain, they are non-linear, and we need to understand when the market will change its mood. Since September, October, we've been in a bullish mode, generally in the sector, but that can change again. So especially with altcoins, you know, the only way really to win here is to look for uptrends, then pullbacks in uptrends and get positioned, but not with too much risk. You always need to know where the structure will break so that you can measure your position size, calculate your position size, and so on. Current thesis is that a larger degree, wave 1 finished in September 21 and the wave 2 bottomed in June 23. I don't like how the look of the move to the downside at all, especially because the last move down was in 3 waves. So that opens the door for the yellow interpretation, which is bearish, which we're going to talk about next. That's the alternative for now. But in the preferred scenario, in the primary count, we have a 5-wave move to the upside and a pullback into a support region. As long as we're holding 29 cents, a rally in a 3rd wave can begin into the region of $2 plus, and then a 4 and a 5 into the region of $4.30 plus. That's the main thesis, and that's what I think it can achieve in this bull market. There is a clear condition. What's the condition? The condition is that we're holding the 29 cent level. Breaking briefly below 29 cents is not so much of an issue, but it's not great. But it typically will lead to a sustained break. And if we get a sustained break below that 78.6 retracement level, the lower boundary of that support level, then it will typically fail. Then it will start to fail. And with the invalidation point, the formal invalidation point is at 21.22 cents. That's the June low. And then it will likely follow the yellow count. What's the yellow count? Yellow count means a wave down into the December lows 2022. Then this here is a flat structure with an overshooting B wave to the downside. You can see that here. A wave, B wave. But it's not preferred because this broke above the 1.618 extension, which is quite high for a C wave, but not invalid. And but it's possible, absolutely possible, especially given that move up was a diagonal pattern, so it could be just an ending diagonal in the C wave. Yeah, what can I say? I mean, this is a valid option, but I don't, nobody knows until we break below support. So the only way to really win this game is to look for what, the support area. What's the support area? Where does it break? It breaks below 29 cents. That's when probabilities start to shift. You have to calculate your position size to that lower boundary or where you set the stop. Be happy with your position, but don't be too aggressive until we see a reversal. I think that's sort of, in my opinion, the best way to do it. What aggressive means has to be decided individually, depending on your strategy, depending on your skill, your mindset, and so on, psychology. Okay, let's go to the shorter time frame for ADA. This is this pullback currently. You see the 29-cent level is the key support down there. Looking at the short term, I've got a few wave counts here, but the main one at the moment that seems to be leading is the white one. I've been tracking that for the last few days, last few weeks. I've been highlighting to you that this looks like a triangle for the last few weeks. And you can say it's boring, but that's precisely what the wave count suggested, that we're heading sideways in a triangle. So A wave down, B wave up, and then a C wave down. And the C wave is a 1, 2, 3. And the fourth wave might be a triangle as an A, B, C, D, E structure. Maybe we get one more lower high in wave E. And then we could breakdown point at 42 cents. As long as we're holding 42 cents, it is technically possible that the market turns around here in, for example, a more bullish structure. And that could be the orange scenario. Okay, what's the orange count? The orange count is a scenario in which we can say that the entire pullback already finished in April, around the 13th of April. And there was a rally in wave 1, a pullback in wave 2. This here would now be a third wave rally. Does it look like one? No, but it could be that we've already completed waves A and B of wave 3, and we're waiting for a C wave rally. And that third wave should take us to around about 60 cents. And then a 4 and a 5 should take us to 65 cents. I need those 5 waves to really believe that we've bottomed on the 13th of April. Yeah, the lack of any impulsive upside structure doesn't make it very likely that we've bottomed. It's possible, anything is possible. Bear in mind today we've got CPI data, so there is likely going to be quite a bit of volatility. But at the moment, we're just moving in a range. I've got an upside breakout point at 52.2 cents. I've got a downside breakout point at around 42 cents. So 42, and sorry, the upside was at 52.2, yeah. So, and any movement within the range is typically not so meaningful, but I'm tracking here this Elliott wave triangle potentially. And the question is, okay, maybe we've already topped in that E wave, and then we would, however, break down quite quickly now. And it might happen, right? It might happen that you can count this technically complete. It's absolutely possible, and it's on the best way to breaking it, and the wave count is full. The E wave of the wave 4 could be complete, but if that's the case, it should lead to a rapid move down. Well, maybe that happens overnight in anticipation of CPI. I'll keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.